Okay, so the learning outcomes in this particular course are around being able to better understand the cost to deliver your mission, and then to understand the extent to which your social enterprise is self-sustaining, and to better understand your organization's required revenue mix of sales versus grants, and then to be able to identify future funding needs. And with this, you can also have a better understanding of how dependent your social enterprise is on a particular contribution. And these reports will also be able to help you quantify any extra resources needed to support your social objectives, and then to be able to make a case for government or funder investment in being able to cover these operating shortfalls. And then to be able to, this will give you an ability to also to weigh up the social costs against the estimates of your social impact as a way of being able to assess the effectiveness and efficiency of your enterprise model. And then ultimately, this will help you to be able to present your case to investors and business partners by clearly showing your cost structure as it relates to both mission and business. So this actually fundamentally relates back to your accounting system and around how you classify and organize your accounts. And we're going to be looking at the particular social and hidden costs that you may have in being able to fulfill your mission, and then how to incorporate these in your accounting system or spreadsheets to give you a better overall picture. And then to be able to use these reports to be able to help your administration and management to be able to further grow and fulfill your mission. So the differentiating social costs from pure business costs can actually help you better plan and manage your multiple bottom lines of a social enterprise. Now, the social costs refer to those costs that are related specifically to pursuing your mission, and they actually distinguish you from a standard business. For instance, because of what you sell, who you sell to, where you're located, who you employ, or how you manage your material inputs of energy, transportation, and waste. While we call these social costs, it equally relates to costs to pursuing an environmental or cultural objectives as well. So here's some examples of social costs, which are around any wage rate premiums for targeted groups, any extra management or supervisory time required, any time spent counseling employees, any wastage that's occurred, any the lower level of employee productivity or efficiency, or increased employee turnover has a cost as well. Any higher insurance rates, or any time devoted to non-profit or fund-related activities. Or you may be pricing discounts to ensure that your products and services are affordable to a target population. Or you may have discounted sales in order to achieve a particular social or environmental objective. Now, in the end of this course, I'm going to provide a resources page. And in this page, I'm also going to upload a worksheet to be able to help you identify some of your social costs. Now, in addition to the obvious identifiable costs, there may be a number of hidden costs or in-kind contributions that you do not pay for directly. Now, if these costs are integral components to your business activity, then they should be accounted for in order to reflect your true cost picture. This is particularly important when determining a competitive pricing policy or future funding needs to sustain your organization in the long term. And now here are some examples of some hidden costs or contributions. Any volunteer services that you access, any discounted or donated goods or materials that you've received, or donated equipment that you've received, any shared receptionist service, or shared things like printers or copiers, um, any office supplies or accounting services that are provided to you. Okay, now let's have a look at the balance sheet in more detail. The balance sheet is a really important financial statement for an organization and provides a snapshot of an organization's assets and liabilities. However, as we've discussed in the last section around hidden costs, many social enterprises may have acquired various assets or contributions which are not represented on the balance sheet. And I believe it may be worthwhile listing these either on the balance sheet or on a separate spreadsheet, because it will help give your stakeholders an accurate snapshot of the total assets that you have access to, and may be helpful if you are considering any sort of corporate partnership. Now, an area where I've seen some organizations get into trouble financially is through the accounts receivable. Now, if you look down on the page there, it's under current assets, accounts receivable. Now, this represents the money due or owed to an organization, and it's created when an organization lets a buyer purchase their goods or services on credit, and can typically arise when your buyer or purchaser has like 30-day payment terms. Now, this can be a challenge for an organization that may have weekly expenses. And if you're not getting paid by some of your buyers for 30 days, this can cause an issue to your cash flow. Now, there are different ways of being able to manage this, and has been typically in the world of business managed through different ways, like having a bank overdraft, but then that means that you've got to pay interest on that. Then there's debt or invoice financing that has different advantages and disadvantages. And I'll go through all of this in a separate training with you. I just want to mention another way of accessing this as well is through accessing your local community currency, like Let's, a local exchange trading system, or Bartercard, which has evolved into Coin. Now, the aim of these tools is to be able to keep an organization operational and continue to exchange value between organizations. Now, to give you a bit of background, the first sort of community currency or complementary currency that was created came out of the Great Depression in the late 1920s, early 1930s in Switzerland. It's known as the Swiss WIR, WIR. And what they found is that people stopped spending. But by creating this platform where businesses could continue to exchange value with each other without using the fiat currency, meant that they could continue trading and operating. So I'll go into this in more detail in another training. Let's continue on with the profit and loss statement. So this profit and loss statement, I call the double bottom line statement. It incorporates many of the concepts that we've discussed and provides some more meaningful information to the social enterprise stakeholders. As you can see, it incorporates the social costs and the hidden costs, the subsidies, the contributions that your organization may receive. Now, this particular format clearly delineates between your traditional business performance on the left and your mission performance on the right. And investors can clearly see the social costs associated with your operation. And depending on that, may choose to subsidize these based on the benefits of your mission. And you can also clearly see if the cost of achieving your mission is increasing or decreasing. Now, this will also help managers and stakeholders to assess the effectiveness of your programs. Now, what I'm going to add into the resources section of this course is a link to some different platforms or tools that can help you to be able to develop reports like this. So the information in your various financial statements, and in particular to start with your profit and loss, can be more meaningful if it relates to budget projections. Okay, so you can then see and determine what your financial performance was over the past year and in what ways or what reasons this performance is different to your budget, to your projections. Now, the other area where some of these statements that I've been talking about can be helpful is to be able to identify exactly what is required to cover your social costs. Now, this is really important for you to continue fulfilling your mission. And it will help you to quantify the extra resources you may need to be able to support your social objectives, and then can make a case for any government funding or any investment from funders as well. Now, these reports can also be really helpful to weigh up your social costs against estimates of your social impact. And that can help you to better assess the effectiveness and efficiency of your enterprise model. So these reports are really important for you to be able to make sure that you are fulfilling your mission. Now, another area is the use of financial ratios. Ratio analysis can be a useful management tool that can help to improve your understanding of your financial results over time. Now, the financial ratio that's derived from your balance sheet is known as the working capital ratio, and it's calculated simply by dividing your current total assets by your current liabilities. And it's a measure of your liquidity, but your ability to be able to meet your payment obligations as they fall due. Now, a ratio of 1 or greater is generally acceptable, but can vary according to your industry. A comparatively low ratio can mean that your organization may have difficulty in meeting your obligations and may not be able to take advantage of any opportunities that require quick cash. A higher ratio can mean that your capital may be underutilized and can prompt you to be able to invest more of your capital into projects that fulfill your mission for your beneficiaries. Now, the profit margin ratio is derived from your profit and loss statement, and it gives you an idea of your how much your company earns relative to your sales. The SROI, which I've got there as well, that is your social return on investment. It's a little bit more complicated and complex and has already been covered in more detail by another course in this QSEC. So I'm going to be including some links to these calculators, these financial ratio calculators as well in the resources section to be able to assist you to get a better understanding of your organization, how it's performing. So I'm going to leave you with some words to ponder. The quote that I mentioned early on, it's by Simon Sinek, and he says, "The responsibility of business is to use its will and resources to advance a cause greater than itself, to protect the people and place in which it operates, and generate more resources so that it can continue doing all those things for as long as possible." I hope you found some value in this, and I wish you all the best on to fulfill your mission. I hope that you're around for many years to come.